Hey, I'm J.R. St. Julien with the St. Julien Real Estate Group, and welcome to my January 2022 market update. The numbers are in for 2021, and man, what a crazy year that was. We've got appreciation finishing out the year at 16.7% year-over-year appreciation, with the median home value of detached homes sitting at $850,000 and the median home value of attached condos and townhomes sitting at $584,000. And inventory levels are down 58.6% year over year to finish out the year with 0.4 months of inventory. That's the lowest we've ever seen. So that being said, that's how we wrapped up 2021. And I know most of you guys probably know, at least feel like, hey, those numbers, that makes sense. That's what we've been hearing. That's what we've been seeing. And now we're into 2022. And January has definitely started out the year with a bang. We expected things to get back to the cyclical nature where the demand increased, the supply would slowly start to increase. And we definitely seen those, but that demand has come back in abundance. And not to mention it, the rest of the markets are going absolutely insane. The Dow is off 7% for the month of January. The S&P 500 is down 9%, and the NASDAQ is down 14%. Not to mention Bitcoin has almost been cut in half from the highs that it hit just a few months ago. All of that is being driven by the rising inflation. We all feel it. We go to the grocery store, we see it. When we're pumping our gas, we definitely see it. And the numbers came in for December at 7%. Now, that being said, it feels like a whole lot more than 7% to me, but that's what the data that the government has put out. And that 7% numbers is starting to make some impact in the marketplace as a whole. It hasn't really touched the real estate market yet, but what it is doing is it's starting to drive up the interest rates. So just in the month of January, we've seen the mortgage interest rates for a 30-year loan climb 0.5% in less than 30 days. And we're expecting that climb to continue as the Fed has issued statements insinuating that they're going to possibly raise rates 4 or more times this year to try to get a hold of that inflation problem that we suddenly have. So how is that going to affect the market? Well, I can tell you right now, interest rates are sitting at 3.5% today when they were sitting at 3% just 2-3 weeks ago. And we're expecting that to continue to rise. So at some point, that does have to have an impact on the buyer demand. But I can tell you one thing, we aren't seeing it yet. To give you a little bit of perspective, if I go back 40 years, the average interest rate is sitting just a little bit over 7%. So we're still, in the grand scheme of things, sitting at very low interest rates. But if you look at over the last decade, the interest rates have been consistently less than 4%. I mean, there's been a few months where it's been above 4%, but for the most part, we've been sitting in the high 2s and in the 3s. Well, now, by the end of the year, due to inflation, we're expecting that interest rate to run up into the 4s. So one thing that I'm starting to see that's an impact to that is maybe the opposite of what you would expect. You would maybe start to expect that a lot of buyer demand would fall off because these interest rates are rising. But what I'm seeing happening right now as we rolled into the month of January, the demand has spiked and it came back in full force. And basically what I'm seeing is that a lot of folks that have plans to buy a home are trying to get it done as soon as they can so that they can lock in a lower interest rate and maybe avoid the 4% interest rate that's likely going to be coming at the end of the year. Now, that being said, 4% isn't a horrible interest rate, but when an interest rate rises by 1%, that affects your purchasing power by approximately 11%. So basically the mortgage that you would have with a 1% lower interest rate is going to be 11% higher if that interest rate goes up by 1%, approximately. So that means that the demand is back. It's full force. Now the inventory is slowly coming back, but we finished out the year at 0.4 months of inventory. That's the lowest inventory that we've ever seen in San Diego. So we've got a long way to climb to be able to fulfill that demand. So what am I expecting for the rest of the year? I'm expecting a very busy and very competitive real estate season. And so that means you need to be prepared, be properly prepared if you're thinking about purchasing a home, and make sure you understand all the ins and outs of the contract and your contingency specifically to make sure that you can position yourself to be the most competitive buyer when you're competing for that particular property. And if you're a seller, it's a great time to sell a home. The demand is still strong. It may slow down a little bit as we get to the end of the year and the interest rates get higher. So that may impact how much you can potentially get for your home. I don't think it's going to push the prices down, but I do believe it will slow the appreciation, which honestly we can all benefit from. So if you're thinking about selling a home, now is a good time as any. And things to think about when you do sell a home. Do I want to sell it as is? Do I want to maybe fix up a few different items before I sell it? I can tell you, in this market, the prettiest, renovated, most beautiful, best presented homes are definitely worth their weight in gold. Homes that are not like in that condition, if you want to sell it as is, you can, but you may be leaving some money on the table if you don't take the time or put in the money or put in the effort to properly present that home. So just food for thought, something to keep in mind. Anyway, that's my update right now. Interest rates, inflation, that's the big story right now. We're waiting to see how that's going to impact the market, but I can tell you what, it's impacting the stock market, it's impacting the crypto market, but it's not impacting the real estate market, at least not yet. So if you're thinking about buying or selling, I think it's a good time to do both. Give me a call. I would love to talk to you a little bit more in detail about your special situation and see what I can do to help. I'm JR St. Julien with the St. Julien Real Estate Group. Thank you for watching my video.